is a Financial Friday, and I'm so excited to have Bill Levitt back on the show with us, founder and principal advisor at Bridgelight Financial Advisors. Good morning, Bill. How are you?
I'm fantastic, Melissa. How are you this morning?
I'm doing fine. Thank you so much. I'm very excited today to talk about changing interest rates. This is a tricky one. How many inquiries would you say, Bill, you get about this?
Well, it's something that's in the news a lot lately. Mm-hmm. It's something that impacts pretty much all consumers and savers in our country. And I think it's really important for people to understand, where the direction of interest rates are going and how they can be doing things to really improve their finances.
Okay, so first of all, this sounds probably like an elementary question, so please don't judge me, okay? But what does it all really mean? I mean, like you talk about it being in the news a lot, Federal Reserve lowering interest rates, but what does that all really mean? You're right, it does impact, the average citizen, but could you kind of just dumb it down for us a little bit?
Absolutely. So no matter what we do in terms of either we're borrowing or we're saving, there is some kind of interest rate that either you're going to pay for something you borrowed, such as a credit card, a student loan, mortgage, things of that nature. And on the other end, it's I'm going to save or put money away, and I want it to grow. So it could be in a savings account with a bank. It could be a money market, a CD, or a number of other financial instruments that you earn an interest on to grow and accumulate your money.
Okay. Thank you. I appreciate that. So who determines what interest rates are?
Well, first of all, the Federal Reserve Board has a big influence, or the biggest influence, on changing interest rates in our country. And they set a number of different kinds of interest rates that, in a sense, if we simplify this down, trickles down to the average consumer and then leads to, or should, I should say first, leads to banks adjusting their interest rates as well as other financial institutions like big lenders and credit card companies.
Okay. Wow. And again, we have Bill Levitt here, who is the founder and principal advisor at Bridgelight Financial, and we're talking about changing interest rates. So how does interest rates, how do those affect our daily lives from borrowing and even saving money?
Absolutely. So, not that long ago, we saw a huge increase in interest rates. Mainly because of the loose money policy of our government and then flooding money into the financial system when they did after the pandemic. And so we saw interest rates go up substantially. Mortgages, as you may know, went somewhere between 2.5% to 3.5%, all the way up to 8 or 9%. And so these are huge impacts on consumers, especially let's say one is going to go out and buy a mortgage. You're going to pay 2 or 3 times more for the interest on that mortgage over the life of a 20 or 30-year mortgage. So it has a huge impact. Or maybe you're going to need to use your credit card. And the interest rates just went up substantially. And you need to know that, too, because average Americans, they have a substantial amount of debt now. I mean, there's $17 trillion of consumer debt right now in the books. It's a huge number. And consumers need to try very hard to keep their debt low.
Yeah.
Because on credit cards, the highest interest rate on credit cards, Moses, is 36%
really?
Annualized. Yes.
Wow. That's wild. That's so wild. But I don't know, do you think that people really realize that, Bill? I mean, with the amount of people who just, keep opening credit cards, use them, swipe them, and they don't realize, like debt. That, to me, the realization of debt may not be so clear for many. Do you think?
I think so, because they make it so easy to get a credit card, and They tell you that you're going to get 0% interest for the first year. Those things are teasers, right? So they put that in front of the average consumer, and it's easy to borrow the money, not anticipating the fact that your future income needs to pay it back. Mm-hmm. Many people don't factor that in when they go and buy things that they sometimes don't really need, right? They need the big screen TV. And then they find out later on that the interest rate went up. And it takes many, many years in cases like this for someone to pay that off. So one has to absolutely be very careful about their spending, make sure they really need things that they're going to borrow money from, and understand the real impact of what that is, and read what the credit card companies are telling you it's going to cost you.
Yeah, exactly. Absolutely. I think it's doing that kind of research. And certainly when you go to, a store, for example, because I get asked this all the time, Bill, and I came up with a mantra a long time ago, which was, are you kidding me? If I get a credit card, I'm going to be here all the time, and then my husband's going to file for divorce. I come up with a whole story, and they're like, we regret even asking you. But, they make it sound so, like you said, enticing. Hey, if you open up a credit card today, you're going to, take off another $40 from this order today. And you're like, all right, what's the big deal? But I think, contrasting certainly the debt end of things, what does, when we talk about interest rates, what does that mean for savers?
Well, there's two sides of this, right? Interest rates went up a lot. It's likely that the Federal Reserve in the coming months are going to begin to lower interest rates. So that impacts both sides. If interest rates start to come down and banks lower their rates, then savers have an opportunity, especially, let's say you have a home equity line of credit. That rate is fluctuating with interest rates. That could come down. Borrowers who take out new mortgages can see rates lower, which makes it easier for them to acquire the home that they wanted. But the other side of it, too, is that if interest rates are going down, what does that impact the other side? And that's the people who are saving, because, you can actually get a decent rate on your money now. You can get 3 or 4% on a savings account. You can get 4.5 or 5% on a CD. And so those are rates we haven't seen in a long time.
Yeah,
and now they're going to start going down, which means the average saver who started to get a decent return on their money is likely, if rates go down, begin to see them earning less on that money. So it's important for them to pay attention to the savings that they have and try and lock in rates longer while they can right now. Meaning they look at their savings account or their banks and look at ways to make sure that they're trying to capture these higher interest rates for longer periods of time before they go down.
So, Bill, another thing is I think whenever we have these chats, it's so important that people realize, the reason that we only highlight like one thing that Bridge Life Financial Advisors, one thing that you'll do with your clients, the reason that we just kind of hyper focus is because I think it really paints a picture as to why you'd want a financial advisor. When you talk about interest rates, for example, it's a very complicated matter, to be honest, but it impacts the average person substantially in their adulthood and going into retirement and all of that. So I think it again just explains the reasoning why you would want a financial advisor and somebody, of your knowledge or your team from Bridge Light Financial to work with. So if people want to contact you, if they want to work with your team, what's the best way to reach you at Bridge Light?
Well, just contact us. They can go up to our website, www.bridgelightadvisors.com, and we have resources that they can pull down to address these kind of things, or just connect with us directly, and you can schedule a 15-minute phone call with one of our advisors.
We always appreciate chatting with you, Bill. Thank you so much. I definitely learned a lot more about interest rates, and I thank you for that. You're the best.
You're welcome. Thanks, Melissa. It was good talking with you.
Always. You too. Bill Levitt, again, who is the founder and principal advisor at Bridge Light Financial Advisors. And again, talking about interest rates this morning on WICC.